In this video, where is the property market going at this point in time? And more importantly, what should you do if you're thinking about refixing your mortgage, buying your first home, or buying your next home? The report from the Nationwide last month indicated a fall of 5% in the property market. That's no surprise, but what many people may not realize is that that 5% fall was not last month. That reflects a fall in 5% on sold prices for property that was agreed 4 or 5 months previously. So sales that completed in November were probably agreed in May or June, before interest rates went up, before the catastrophic budget, before inflation went through the roof, before the crisis we're facing at the moment became as bad or anywhere near as bad as it is. And therefore, you can expect those falls as the figures come through over the next few months to increase. And I'm sure you can do your own sums as to where the property market will go if this continues through into the middle or end of next year, or even beyond, who knows. The banking trade body UK Finance released a forecast for 2023 predicting that the number of property sales will fall 21% from 1.2 million this year to 1 million over the next 12 months. That would be quite a conservative figure, actually, because the average in the UK in an average year is around 1 million. The previous year was higher than normal because of the buying frenzy created by the stamp duty holiday, which for many people will have catastrophic consequences because there are many people out there who got caught up in the frenzy and overpaid, but it's another matter. It also suggests that the value of lending to homeowners will drop by 23% and lending to landlords will fall 27%. Now, the mortgage market is still very volatile. And for those who've watched my previous videos a month or two, I was saying do not fix at this point in time. Wait and see what happens with interest rates. Wait to see what happens with the OBR report and as it's digested. But still, I believe the gap between the base rate and the fixed rate deals is too high. With the base rate currently at 3%, although the Bank of England is due to meet again on the 15th and it's expected that interest rates will rise by another 0.5%, the gap between the base rate of 3% and the average fixed rate mortgage, which is around 6%, give or take 0.5%, is quite large. And there is room for that to settle down, and we need to see how things are going to go. And I would strongly urge you not to tie yourself into something at this point in time, because although I do expect interest rates to rise further, they won't be staying high for 3 or 4 or 5 years. So you may gain in the short term next year and halfway into 2024, but probably by the end of 2024, you will see interest rates fall way below where you have fixed that, and you could lose out in the longer term. Hence the reason, as I previously pointed out, that many of these lenders with their 5-year fixed deals have sneakily increased their early settlement figures to as much as 7%, I saw, which is horrendous, and it's not actually displayed in a manner that you would notice. It's hidden away in the small print, which is atrocious, to be perfectly honest. So you need to look at not just the interest rates, but the early settlement figure. I think the coming year will be a challenge. In the meantime, as I've constantly maintained, if you are a first-time buyer, be very, very careful, especially if you are buying new. I do stand by my advice that if you're a first-time buyer looking at buying a new property at the moment, if you can, I would hold off, because my greatest concern for you is that if you buy new property now where the market is, you could be in negative equity for years, and that could be catastrophic, especially if your circumstances change, job, career, life, whatever it may be. If you're a next time buyer, there's absolutely no reason not to move. However, any fall in price that you may accept on your own property, don't forget to reflect that on the property that you're buying, not in pounds and pence, but in percentage terms. And if you do that, and you're, say, moving upwards, you may find that you may even benefit from the fall, because a 10% drop on 500,000 would be 50, a 10% drop on 800,000 will be 80, for example. Just thought, if you are thinking to move, if you're next time buyers, there's absolutely no reason not to move. But the area of the market that I am most concerned about are first time buyers. I don't want to see you signing yourself up into negative equity. If you're first time buyers, if you're under 40, you won't remember when this happened 30 odd years ago. There were people who bought in 89 who are in negative equity right up until the mid 90s. And I would not like to see that happen to you. Anyway, as always, if you have any questions, feel free to email me, Antony@trellos.com. And in the meantime, I'll see you in the next video.